from Nimbus, where we help online sellers save money and boost profits so their business is recession-proof. Today, I will continue talking about profit margins, and the subject for today is the guide to operating profit margin. When running an e-commerce business, you need to keep a close eye on profits. But profit isn't a one-size-fits-all term. There are several different profit margins you need to know about, including operating profit margins I will be talking about today. But what is your operating profit margin and how does it differ from gross and net profit? Your operating profit margin is a measure of your business's profitability. It tells you how much profit your business generates from its operations after deducting cost of goods sold, we talked about already, and operating expenses. The net profit, on the other hand, is what is left of your profit after you deducted all expenses, including taxes. Operating profit is simply working out how much your business is making from its operations, ignoring other financial aspects like taxes or interest, for example. It's important to know your operating profit margin because it's a good indication of how efficient your business is. A high margin means you are generating a lot of profit from your operations and your business is running smoothly. A low margin could mean you are not selling enough or that your operating expenses are too high. How to calculate the operating profit margin? The first step in working out your operating profit margin is to calculate your operating profit. To do this, you need to know your business total revenue and cost of goods sold, as well as operating expenses. Operating expenses include things like rent, wages, salaries, software subscriptions, marketing and advertising, internet, utilities, or insurance, things like that. Once you have this information, you can calculate your operating profit by deducting your cost of goods sold and operating expenses from your total revenue. For example, let's say your business had total revenue of 100,000 last year. Your cost of goods sold was 50,000. And operating expenses were 30,000. This would give you an operating profit of 20,000. Next, to calculate your operating profit margin, you then need to divide your operating profit by your total revenue. So in this example, your operating profit margin would be 20%. In summary, the formula to working out your operating profit margin is operating profit divided by total revenue and multiplied by 100%. It can be very helpful to compare your operating profit margin against your gross and net profit margins. Your operating margin will usually be lower than your gross profit margin because the gross profit does not include other forms of income, such as interest or investments. However, it should be higher than your net profit margin because it doesn't take into account all expenses, including taxes. If your operating margin is lower than both your gross and net margins, it could be a sign that your business is inefficient or that your operating expenses are too high. You should also compare your operating profit margin year on year, because a decline could indicate that your e-commerce business is becoming less profitable. What causes gross profit margin to increase? There are different things that can cause your operating profit margin to go up. If your revenue increases, but the cost of goods sold and operating expenses stay the same, then your margin will increase, right? It's simple math. You can also boost your margin by reducing your costs and operating expenses. For example, if you negotiate better terms with your suppliers and find ways to reduce your utility bills or rent, your margin will increase then. And what causes gross profit margin to decrease? It's the other way around. If your revenue decreases, but costs of goods sold and operating expenses stay the same, then your margin will fall. However, if you have to pay more for your purchases or your rent goes up, whilst your revenue remains the same, your margin will fall down. And the final thoughts. It's important to keep track of all your business financial metrics, including operating profit margin. By understanding your operating profit margin, you can get a good indication of how efficient and profitable your e-commerce business is. You can also use it to compare your performance against other businesses in your industry. Operating profit margins vary depending on the industry you are in. Some industries are naturally more profitable than others. So you should compare your margin to other e-commerce businesses to get more accurate idea of how your business is doing. If you want to learn the exact step-by-step plan to increase your profits by at least 30% in the next 12 months, I really encourage you to watch my unique training. It's available on demand and it's totally free. You can just click on the link below to get instant access to it. That's it for today. Thanks very much for watching, and I will see you in the next video.